and in German. So I think that's the most important thing. And now I would like to ask our host to come to the stage. Dr. Leber, welcome.
I
just tried to reach you, Dr. Leber, recently because I thought we could talk before about how you came up with the ideas of the conference, but then I was told, no, it's quite difficult to get to you because you were in Omaha at that time. Now, what is the situation there overseas about the investors? Well, it's good because on the one hand, we recharged our value batteries. So we got about 40,000 people, 99-year-old and 92 years old, and the young ones, they were actually sitting on the stage and answer questions for 6 hours. I mean, that's a good feeling, and there's a good atmosphere. In the 90s, we looked at history, and now we look at what is ending now, and how can history or business images get destroyed. With Charlie Munger, we've got someone who tells us now we're waking up, we're growing older, and what is going to happen. And this is part of the life cycle, of course, and it's good to look at that. Your investments, when we look at the market, everyone's looking at inflation and the turnaround in the interest rate policy. And now you said we have to hedge against inflation at an early stage already. Probably you could have earned some good money. Do you still say that we have to hedge against inflation? I think we have some products like inflation swaps, which are innovative products. Last year, we took about 120 million that we put into our system and extended them for another 5 years because I think inflation will come back. That's a basic effect, but it will actually become part of our society and not go away for a long time. And we say, when we said 2%, now it's much more, which will be the new normal. That is what many people are saying. We are in inflation. Hydrogen, biotech, those were your favorites, I think. So what are the favorites for this year? Biotech and artificial intelligence still, because these are drivers for the future. It's a physical world now, but 20 years we talked about the virtual world, where new customers didn't need more investment. One new Google customer doesn't need a new factory. They're just there, and you can put them in the virtual world. But the new world is physical. We need lines for hydrogen. We need pipes for power for hydrogen, for new steel works. And we need huge investments into the physical world. And we are just trying to find out where's the best point to get into that. Producers of green iron or green hydrogen, somewhere there must be a possibility to earn money, and that will be definitely within the next 5 to 10 years. Well, you were starting with cryptos early. Now we've got a winter in cryptocurrencies. You still say we have to be in that business? Yes, of course. Last year we heard pros and cons. Well, cryptocurrency, that was really interesting. Crypto had a very good situation now with the banking crisis in the United States, because when you notice that the banks cannot actually endure because one manager is just not working properly, crypto still remains. And crypto had a good upswing in the banking crisis. There are always the summer and the winter phases. Right at the moment, we're in the winter phase. That's right, because SEC is not a bit more looking at the providers, but the crypto euro will come too in the future, I'm sure. It will not go away. So in times where often people want to grab the quick profit and projects are realigned, how can you convince us that we need some patience and endurance? Okay. Thank you for this very good introduction. It will be a really interesting day. On the one hand, I'm really proud that I can see you all here. I think we've never had such a renowned audience, and there are many great names in the audience who shaped us, really. If I think of green hydrogen, for instance, there were some contributions that came from you. When I think of the election program or the political program in Berlin with old age provision and retirement, the impulses came from you to bring that into politics. And I'm very grateful that we can be so interactive here. We have great speakers today, and after my presentation, I will again show you what kind of presentations will come. My presentation is called Time is a Friend of the Wonderful Business, and I just asked myself, how can we actually let our thoughts flow. I am going to Omaha, to Warren Buffett's AGM. I leave Germany with our government and the dispute in the government and the non-availability of train and no regulation and power lines are not being built and all is delayed. And I think, what a chaotic country am I living in? And from that situation, I go to the United States, looking at what Charlie and Warren have to tell us. And I feel a lot of wisdom there. After 92 years and 99 years of age, they have seen something and they were really successful. So what are they saying about the entrepreneurial situation? Now I've come back from the AGM. Omaha is a very green country, a very green region with a lot of forests. And do I find analogy in nature from what we see in economy? I see the forest. There are the little saplings that are getting bigger, become giants, and actually I think I don't want to cut the forest once in half a year so that nothing gets too big. And I think, what kind of nonsense? Why don't we let nature do its work? And some stay small, others will become giants, and only the big ones will be successful. That's an idea that I have seen last year very often. Now I came back from Omaha. I'm in my plane, and I think, what is going to happen in the next few years? What will be the development? So I questions to my colleague Dendler. Do we have some data about that? How about the young companies? How about the old companies? How do they develop? And he sends me 160,000 company data that I can analyze. And it's really true. The growth of companies and also the dying of companies is what in the end drives the stock exchange prices. I try to translate that into the rules of investment. When should we come in? When should we exit? And in which funds? That is actually my presentation. And as usual, I've got a lot of material and not much time. So let's start. I'm leaving Germany. Let me see where I can see what I have to say. Okay, here it is. First of all, what I see is now I've got some problem. That's too small. I cannot see that behind me. On the left side, the risks. I leave Germany full of risks and dangers. We have the inflation, which is very real, and it actually dispossesses a lot of the companies. Some usually saver who's got money on the account will have in the end less because inflation is physically dispossessing that. And then I see raises of interest rates in the hope to fight inflation. That is detrimental to everybody because the financing costs increase. The government doesn't have enough money available because they have to pay interest rates. Companies have less money available and banks will give less loans. Now, TLT exit, a customer of ours told us that the liquidity programs of the ECB are finally expiring and the monies have to pay back the money. And these billions are then missing in the economic cycle. Then we've got the debt crisis in the United States. I don't know about the prices today. There's a few years, every bit of stress all the time. Now we see some more stress, so these are real problems. And then there's the war in Ukraine and Taiwan, China, this conflict, which is a big concern for Japan in particular. It's huge. And I see fragilities on the bottom right side. In Germany, we are in a very insecure situation. The location of Germany is not good anymore. It lives off its old glory. But in Salzgitter, I heard an economic expert from Berlin who said, I'm building here a green steel work and steel factory, but I need to get green power and I have to be sure about the power price. And I want to build another 2 steel factories. But I need to have a security for the site, and politics doesn't give me the security I need, because when I don't know what will come, I actually have to ask myself if I have to invest somewhere else. And last week, I saw the dispute among the government parties. Habeck, in his philosophical way, who was actually very rough, and Merz too, they don't like each other. Scholz basically didn't say anything. And we're just asking ourselves, when will this government fall apart, or will they manage in the end? That's the fragile part. And the banking system, luckily, the European banking system is well regulated, so I don't see many problems there. There were in Switzerland these huge problems with Credit Suisse. In the United States, there were 3 bankruptcies of banks. It's not so secure everywhere in the world. And the real estate market, I don't know, obviously the agents and the brokers don't seem to have too much work. Obviously, there seems to be a stagnation in the real estate market. And when there's a stagnation, it always means that the market isn't working properly. Everyone's waiting what's going to happen. And then I think of the size reduction. And then very often companies go to the United States because there they can invest and they can do a write-off at once. And it doesn't take too long, because in Germany it takes a year till they get the permission to do so. Then we've got, when we finally have all the approvals, then you have to wait if nature protection says, hey, there's a certain rare animal species there, you cannot you cannot build anything there. So actually the opportunities you see here, infrastructure change, climate change, and so on, that's really real. Biotech, artificial intelligence, and so on, these are all topics that I will see. I will see happen in some countries faster, in others more slowly, but they will come. We'll have a change towards green. We'll have a new train system, new airports will be built, and there's the power from China. Biotech will find new solutions and so on. Artificial intelligence is developing so rapidly, and then I can look to the left or right bottom side, but when I look up, I see that basically the world is full of opportunities. I don't know where they will happen really, but I know that when I do enough research, I will find 2 or 3 companies with good performance.
The world is fascinating. In Omaha, and the journey begins, and so let me thank the 2 colleagues, Buffett and Munger. When they were born, what didn't exist back then? Well, I looked it up. As Charlie Munger was born in 1924, only 35% of households had a telephone. Just think about it. This was the new thing. So one third of households had a telephone. This was the new trend. And what happened afterwards? Television didn't exist yet. Warren Buffett was born in 1930, and he lives through the wars. He sees Pearl Harbor, buys his first shares back at that time. Then there was nuclear power, the Cuba crisis, the atomic bomb, the communism in Europe. I just visited Berlin, and there are still stones from the Berlin Wall there, and we just hopped over that symbolically. And 33 years after, basically no one knows that this was a separated city, that Dresden and Leipzig, these were unknown cities to me, completely unknown behind the wall. And this is gone now. Aspirin was known, penicillin was not. Penicillin was still to be invented, and from that perspective we were able to see what can still come if economy has a free space to act. So we're now wirelessly talking over the phone, we're having surgery with lasers, and we're getting health advice by ChatGPT. And so there was really a lot happening in those last years, and there's a lot to come. And that's why it's very interesting to listen to those 2 people. So we always say Charlie Munger and Warren Buffett, these are value, and these are last book value, and this is not true. These 2 are very they really see chances in the growth of companies, and Charlie Munger says that in the long term, a company can hardly work better than the company beneath it. And so in the long term growth, pulls a company on a string upward. And if they don't grow, you can still get a yield, but you can't grow with the big trends. And they say it's important to invest in big trends, not in the cheaper companies. And he always says he is more interested in the business model and less in the model and less in the management. And Charlie said, well, Coca-Cola had an alcoholic in management, and he was a problematic person, and Coca-Cola went through this because the good business model beats bad management. And so if you're working in the right sector with the right company, then you're in a real good position. And one thing is, where do I want to be? Who is the best provider? And if management is great, then everything is fine. Charlie also said technology is killer and chance. Well, business models kill or technology kills business models, but it is also a chance. So here are quotes. I'm not going to read them out. This is one of the persons who tested the iPhone from Steve Jobs in 2007, and he did not know that the iPhone would really revolutionize the entire world. There is more than 1 billion smartphones in the entire world, and I myself did not imagine 15 years ago what this small box would mean in terms of changes. So not only when it comes to speaking over the phone, but no, it's about all domains of communication, measuring blood pressure, etc., etc. It's incredible what this technology brought along. That's why I invite you to be optimistic. So what we see in new developments, we see really big chances for the upcoming years, and we people we can't really manage these kind of changes because, well, most people are not able to look beyond the next will become a giant in the next 10 to 20 years. And I gave you a couple of examples where I think where the future is. So we have an avatar to the left. This is what I saw at a conference in London. So this is a small box, and in there you have a three-dimensional person, and this is computer. This is completely computer generated. The music is also generated by a computer and sung by a computer. And so I have a small box with artificial intelligences that make music with artificial voices. So these kind of avatars will be a thing in those next years. Then we have communication, one of the human basic desires. So this comes from a conference that we have where everybody gets together once a month. So people like to talk. You're just listening to me, actually, babbling away. And this began with a telephone, continued with television, internet. The human desire to communicate will take up even more space and time. So communication is one of the key areas of the next years. So to the left, we have pharmacology. I expect major breakthroughs in medicine. We see that with not with DeepMind, with AlphaFold. This is a Google daughter, and they try and forecast protein developments in order to separate mRNA, and then to see what kind of what that brings. And this is a very new thing. These kind of breakthroughs these kind of developments have only been there for 1 year, and there will be breakthroughs, incredible breakthroughs. And then here you see a solar plant, and we will also not get around improving that. These are things that I see as fixed for the upcoming years. And well, this is coming even though we have so many problems today, even though we have a war, even though we have problems with China, even though we have the climate change, even though we're losing biodiversity. I think these are things that are not to be stopped, but nevertheless, we need to think about what is going to be in 10 years, because I think that these trends are unstoppable. And the reason for it are the human basic needs that we see here in the 7 deadly sins. I have actually dealt with those a couple of years ago. This is not a biblical thing, but this is a development in church. This is about greed, about things that we humans like to do. Actually, we like to show what we have. We're envious, and these are very deep needs of us human beings. And if I try and cater for these basic needs, then I'm going to be successful. Well, the needs are different, but the type of the way that these are catered for changes. So the technology change in order to cater for a need. So to the left we have the pocket watch. This has been invented in Nuremberg in 1510. After that we have the mechanical watch, we have the quartz watch, the radio-controlled watch, the Apple Watch, and many people today don't have a watch anymore, but they look on the smartphone only. That means the need remains, and the question is who will cater for my need the best in the upcoming years. And if you look at that, you find the companies that will explode in those upcoming years. And here we have a great example of a company in which we were invested once. So this is the turnover development, Bed Bath & Beyond. So I still have the photo with you as we did a shopping tour at our Oma trip, and we had great textiles, and I'm not going to show the photo right now because that's not the, but we went through the shop store and said, okay, you need such a store, and so you go there and shop for your bathroom, and everything is great. And then management is bad, the shopping behavior changes, and then everything goes downhill. And these cycles should be seen. And then somebody told me, so a new manager, a new strategy, a board that lives up to all requirements of ESG, but then he didn't know about the economy they were acting in, and then the company broke down. And that's why we have to really ride those waves and exit at the right point in time. What is new today in the virtual world is that we have a winner-takes-it-all system. So shops for bathrooms, I can have 5 one to another, and they will all prosper. But winner-takes-it-all means there is only one winner anymore in a sector. So in normal markets you have Pepsi and Coca-Cola. In virtual markets you have only one who has 90% of the market share and takes 90% of earnings. Number 2 and 3 receive 10% of earnings, and the rest don't have anything. So it is really, really important to find the one winner in the individual sectors who is going to get everything in the market. And this is a very interesting analysis that comes from a business partner of ours. This is a study from the US. So where do the yields come from? So today we're used to measuring everything on ETFs. So that they are the big indexes and the ETFs, and everything is measured among these. So then I have science that tells me, okay, you always need to crop portfolios, big trees need to be cut down, which will then lead to the fact that the very big drivers of performance are missed. And this is the distribution of yields over the lifetime of companies. So the black bar, this is the median. This is the median, and this is if I if I weigh everything at the same way, and the mean way you have the mean you have is if some of those values may rise, so 6%, 8%, 10%. These are the titles to the right. These are shares that have yields of 500%, 1,000%, 10,000%. Then I looked at what happened in our portfolios. Did we really have those kind of stocks grow in the past? And if I look at it, then we have Microsoft here. So I made a limit at 400% of yield. Microsoft, Nvidia, Novo Nordisk with their insulin. We have Berkshire Hathaway, and these are things in Taiwan Semiconductor. These are companies that have more than 400%, and you can only reap those rewards if portfolios. If you do not do that, if you stick to old school teachings and cutting down positions, then I'm not having the big ones grow, but I'm going to pull up the smaller ones. And actually, it is good to really have the good ones grow for a long time. And then we have others below. This is Bitcoin Tracker, Nvidia, Israel Vision, BioNTech, Microsoft, Evotech, VMware, Software and Alten. These are stocks that have made more than 400%. And then I have a very practical example, Nvidia. So just look at what we did with them. So we bought them in 2016. Back then we thought for our AI, so what kind of PCs do we use to calculate those? And then we had the Titan and the Atlas machines. These are powerful computers that work with NVIDIA processors. And at the same time, we also purged NVIDIA stocks because we thought this is a company that does things right. And then in 2018, we met Denson Guang. He's here in the middle. He's the person all in black. And at that conference, I just thought, wow, they're really doing everything right. And then, I don't know, and then over the years, I watched them, and they were getting better and better and better. And in the end, we had more than 1,000% of yield, and we only touched that 4 times. We purchased purchased again twice, and then we reduced our stock a little, and then we reaped the results. So we have 3 green triangles. These are the purchases. We have one red sale where we had to adjust a little because the position became too big, and the rest was NVIDIA that did that. And but this is an example. Good companies go well. You should really rather sell the worst ones. So we have growth and maturity stages for companies. So we have a development phase, a growth phase, a maturity phase, and an exit phase. So we checked that. We received many data, and it's right what Manga says. Companies with better turnover, development also raise their market value in a better way. So so we, depending on the concept, we have very young companies in the Satini fund, and those two, and ACATIS value, and here we actual global funds and fair value modular. We have those in the maturity stage, and then in the end we have the ACATIS value and value event in order to also be present in mature companies to also profit from stable business models. So when it comes to empirical data, this is the company growth depending on company age. In the beginning, we see spin-offs. They start big, then they have a consolidation, and then they grow for 100 years. So this begins from year 10, and then until the 30th or 40th year, it goes straight up. Then I need margins in order to make money. So margins are starting in a valley, so in the first 10 years, and then we have a certain maturity. With a great product, I get more and more margin, and from the 30th year, margins are going down again. Then we have competitors who say, well, I can do that too, but I'm going to do it a little different and a little cheaper. And then we have this scale up to 100 years. Well, that this remains a little, well, this remains pretty much the same. But in the first 30 years, this is where companies can enhance their margins and can gain market shares. And with that, the stock value corresponds. So in the beginning, we have spin-offs that get out of big companies. They're big, they're consolidating. And then up to the 50th year or the 60th year, the market value is rising. And then they have a phase where the market price development is stagnating, and then we have a second wave afterwards where companies can develop.
And now we talk about a concrete situation. How are we going to do this? How do we find the young companies or the companies that are maturing, and when do we start to exit? The way we work, we try to actually gather new concepts from observations. We go to Montferrand to see how plastic is recycled. We go to Breslau, meet with Mr. Kranek and see what he's doing in his research institutions, and can those devices become possible, can they be launched on the market? Then we go to Formicom and see about the biosimilars that are being developed there. We go to SSC and see, is there progress in the fuel cell sector? How about hydrogen fuel cell and so on? So it's observing, it's going to trade fairs, to agriculture fairs or other fairs and roadshows to see what there is. And then at regular intervals, we sit down and describe the world as we see it in 10 years' time. What will we have still? What will have vanished? Will a car still have tires? Probably yes. Will it still have a combustion engine? We don't know. But the tires will probably remain. Will we communicate with each other? Yes, probably we will. We will be in exchange with each other, but how will we do that? By what way? With a normal telephone or in a different way? And this is what we are doing in the team. We're sitting together and thinking about the world in 2 years' time. Will we travel more or less? Will we communicate more or less? Will we be healthier? Will we be older or not? Will we still want to play? Yes or no? And what will be the products we want to use? Do these companies exist today, or will they come later? And among the companies, will they earn money? Or do they first want to achieve something? Or do they want to improve the world without the need of earning money? And when we look into, when we look 25 years in the future, that's not my idea. This is a concept of the company Martel. Markel is equipping students with money, some few shares, and they can not be touched within 25 years. And then a new generations of students will come 1 year later, again with shares that they cannot touch within 25 years. And this program has now started again, and they do not look at the stock prices, they don't look at the dividend return. What they do is they see if this is something which will still exist in 25 years. First question is, will we still use copper wire? We will maybe get an answer today about that. Will we need copper for electric lines? Will we drink beverages from cans or bottles? Still, probably yes, but who knows? Will we still talk to each other? Will there still be medication? Will there be a pharmaceutical industry? Will we go on watching movies, or will we do something else? Will we still drive in combustion engine cars? Will there still be fast food? The interesting question, will McDonald's exist in 25 years of time? I don't know. Will there be Starbucks still? What I can say is that we will probably cook less than we do today. So I will probably go out more. Where will I go? To a fast food restaurant or where? Will I still use the iPhone? My hypothesis is that probably not. It will not exist in 25 years of time. Probably something else will exist, but we will hear that in other presentations maybe. Now, agriculture. I'll just take a few examples. Agriculture will change, but we will still have agriculture because we have to eat. Question is, do I actually do I spray whole areas, or do I have a sensor at the tracker who can tell me where there is some pest, and then I just punctually spray on that? Or will there be a drone flying across the field to see where the pest is or where the herbs are that I don't want? Or do I have animals to do that for me? Maybe some insects that can destroy other pests. How about diagnosis? Will we have more diagnostic tests in the future? I was in Japan and I was rather astonished that in Japan, when I go and see a doctor with an infectious disease, they first do a test if it's a virus and what kind of virus it is, or is it a bacterial disease. In Germany, I go to a doctor and they say, hey, bacterial infection, take an aspirin and go home and lie down. So they treat the symptom. In Japan, they try to treat the cause, the root cause of the problem, and find the right medication for exactly that cause. Now, who will dominate the field for biologics products or generics? Biologically produced medication out of big vats full of yeast, of fungi, or cells of animals. Currently, they have a growth of 8% per day, patented. Of course, will there be generics? Will companies come in and try to become competitors of the current leads of the market? Will artificial intelligence lead to more or less concentration on the market? Is it that knowledge is important and say, hey, I've spent so much money to gather the knowledge, now you can buy it back? Or has it become more democratic? Will knowledge be shared in an easier way? Will universal banks become larger or smaller? Probably smaller right at the moment. Will we drive electrically, and who will build the grids for that and the gas grids? These are questions that we can look at and we can answer them. And now I come to the practical side. I just talked about SFC Energy, this company. It's a long way from year zero when you have a concept until finally you can earn money. And on the left side, that was on Schloss Elmar before it burned down. That was us actually. Came a few later. This is Manfred Stefener, who presents a new type of membranes for fuel cells. He developed that and he said we need to make a company of that. We would call it Smart Fuel Cell. And we do methanol fuel cells for camping vans or for yachts. Not for the car, because they were too small for that. So he's sitting there presenting the idea. We invested at that time, and then it took about 23 years until this company actually made it to get big orders. Now they've got a big order from India. Recently they got that. There's a big company, so Buddha goes with Mr. Habeck to Canada, with Chancellor Scholz to China and so on. So it took them 23 years from the first concept, which you can see here on the left side, until there was an industrial production. And I suppose in the next 30 years, this industry will become very, very interesting. Then volumes are coming in, and then profits are coming in. So this company is in an ideal shape to take profits in the next decades. So it's one thing to have a new idea, and there's so many new ideas. Every week there's a new battery idea coming up, and revolutionary solar cells, a miracle battery, the perfect cancer therapy, a great patent. This is something you see every day, and people are coming to us and say, hey, that's a great idea, and when it works out, the world will change. But it's a different thing to actually convert these ideas into practice, to design a matter in a way that a customer will in the end spend money for it. And so much that in the end there's a profit. That's a long way, and 20 years is not untypical for that. The innovators that we see very often overestimate their competitive position. Very often they do not know that there are competitors on the market who produce almost the same thing and are quite good at it. And sometimes they are bigger or they have more power, and so the better idea cannot then fight the maybe not so good idea, but which is bigger. And what's important is not the concept, but the customer who pays for it. And I'd like to observe how a product is more and more accepted by the market, and when the profit curve is rising, we increase our position. And there are companies who are growing and growing and growing and getting more and more into losses. Those are the problematic candidates. They give their product away for free, and I cannot actually make any money on that. Two examples I really like. There's one company, it's called Idorsia, and for about 2 years we have been invested in that based on the idea of a customer. They have a new sleeping pill. It's called QVivic, and you see the prescriptions. It was launched last month in the United States. And obviously, this company seems to manage. They are not yet profitable, but they have actually found a way that the market accepts this product. Meanwhile, it's the most sold product in that category. And this is Basilea. This is about multi-resistant bacteria and fungi in hospitals. And they did so much research. And for 10 years, I've been looking into the research results there. And in February, I was in a conference and I saw they're coming now. You see this small curve, the EBIT, they managed. They actually broke free. And now they can actually get the profits. And I think in the next 5 or 10 years, this company will have its position. And then we have to observe, are the fundamental factors of the company still okay? Can we actually be invested? Will there be more in turnover? Is the market share of the company increasing for the profits? Do they get profits? Win it over from competitors? Is this a benefit for the investor? Will the investor get any benefit of the profits that they have? Or does the management take all the profits to do something? Or do they buy a company which was wrong and then just destroy the money that they have? So it might be a good company, but do I get some benefit from that? And if yes, then you just keep it and let it go and do nothing. Here there are a few examples. This is the company Nubank from Brazil. It's a neobank. They are in the Buffett's portfolio, and you see the number of customers. This is on a quarterly basis here. All of a sudden, the new bank in Brazil is just starting to fly. I phoned them and they said, okay, 3 countries are enough. They said Brazil, Mexico, and another Southern American country. We don't want to expand. We first want to get very good in those countries and increase the intensity of customers. You see here the dark ones are the new customers, the gray ones are the old customer. They want to increase the number of products per customer, then the sale per customer and the margin, and they do that systematically over time. So if they've got a customer, they try to do cross-selling to get more profit out of one customer. This is the business model, which is really great. It's called land and expand. First you land at the customer and then you do cross-selling. SAP is doing that, for instance. First one product and then the next and the next, until you're just caught in this web of the dependence of this one provider. It's great from an economic point of view for us. And then a very boring example, Japan. For 50 years, I shouldn't have done anything under the company of Nitori. It's like IKEA in Japan. It's a number of shops and the profits and the sales, and they're growing and growing and growing and growing and growing. It's quite trivial, actually. I don't have to do anything about Nitori. I don't need any management meetings. They are doing that for me. It's quite simple. Now, what do we do today? We read business reports in the style of Warren Buffett. There are the data on the left side, and on the right side, the decisions of Warren Buffett. And artificial intelligence helps us a lot to see these trends. A company that is growing and maybe maybe is very good, although the market is a bit skeptical. That is what our two AI models are doing. One is an external model, the other one is our proprietary AI model, and we get regularly quite a few percentages out of that. Then you come into the dividend phase, the market is exhausted, I pay out money because I cannot invest anymore as a company, I buy back shares and give the money to my shareholders. That is good for the value dividend fund. This is the mature companies where we get the returns. They don't grow, but we've got safe returns. And this is how we got it in the funds. And this is now the next point. This is exiting. When do I sell in the end? When the company is getting weaker, when there is a limit, when they reach the limit of their growth, we plan the exit. Is the market saturated? What are the competitors doing? Are they getting stronger, or are they still under control? Do we see an increasing unreasonable behavior, large takeovers that are not worthwhile, or large share buybacks that are not justified, arrogance towards competitors, diversity more important than performance? Inertness. We've always did it like this. It's proven. We don't have to do anything about that. Our power struggles, our self-service of the management, these are indicators to exit the company because the company has reached a point where nothing else will come. Now, there's an example of Boeing. That's a good example of how to destroy a company. Boeing is still an excellent company, but there was a succession struggle at General Electric, and two losers had to leave. That was McNerney, who went to Boeing, and he relocated the headquarters to his place of residence in Chicago. I thought, why are they in Chicago? They're producing in Seattle. Okay, then there's a change of style in the management, cost before quality, and then there was a quality issue. And the company still has a great issue. And when you've got that issue, it's not easy to get rid of that. So this is how you can destroy a company. This is a practical example. I've got 5 minutes left, so I would like to talk about our next speakers that we will hear today and why we have them here. I'll start with Lars Feld. He's talking about economic and financial policy in the turning of times. After the coffee break, he will talk about our situation today. He's close to the government for a long time. He was the chairman of the so-called economic wise people in Germany. That is Economic Advice Council. Today he is the head of the institute in Freiburg, where they actually look at the traditions of Ludwig Erhard, which is a proper and well-ordered social market economy. And I hope you have got a few provoking questions. And I hope you'll have fun in answering them quite clearly. Then we will look into the future. We'll look 10 years into the future, and this will be done by Lars Thompson today. 520 weeks. What will happen in the next years? You are here with us usually once in 5 years, updating your forecasts, and it's always nice to see what the world will turn to, and there are always quite some surprises that you're going to show us in your view of the future. And then we'll have Philipp Kranek. He's over here. Lars Thompson's here, and Philipp Kranek just came here from Poland. He didn't have the time to send us the presentation beforehand because he is he has to deal with new transactions. It's a very young company, basically too young for us, not yet 10 years old, from Poland, high-tech. And the question at XTBL, the Polish company, was not what kind of technology do we have, but what is it we shouldn't do in order not to do too much? And with this great technology, what business fields do we want to explore into? And they could explode in the next few years, and Philipp Kranek will show us that. I never know if I should say that, but I think this is our really great point in the portfolio. This company has a stock exchange value of 100 million. Maybe that could be 200 million. Maybe it comes, maybe it will not come. Maybe Mr. Kranek is doing the right thing. Maybe he isn't. You will be able to judge for yourself after his presentation. Now, We were in Clermont-Ferrand at the property of the Michelin tire company, and there we met with Mr. Ladon by Carbios. He's over here. And we are all so angry about this whole plastic waste that we find everywhere, in the seas, in the oceans, or in the forests. We don't like to have this plastic in our textiles, which will just never be degraded. And I read an article about what needs to be done, or what should be done. Should you actually prohibit all that? No, you can simply recycle it. You can use polyethylene and bring it back by chemical means into its initial substances. Yeah, there are different ways. You can burn it, you can melt it, you can chemically degrade it, all with enzymes. And the enzymes stem from natural processes. They were designed from natural processes, and in the end, in the industry, they can actually degrade polyethylene. And I think that's really fascinating. And the question I asked Mr. Ladon is, what is he most worried about? And it was not that the technology wouldn't work, and it was not that the production couldn't be built up. It was not the profit that he was worried about, but as a trend, he said we will have so much demand that we will hardly be able to satisfy that. How can we actually cope with the very many projects that we will see in the next few years? What's really interesting and very close to practice, that's not a pipe cream as we usually say, it's a real plant. That is a big new plant. Construction is just being prepared, it's very real, and Mr. Ladon is going to talk about that later. Now we come back to Germany. I've got here quite a few interesting questions. If the site of Frankfurt is still interesting, we go into the Bergische Land, and Peter Schildbach will report to us. He's a manager in third generation of the company Elektrisola in Neustadt-Eckenhagen. This is about copper wire, and one could say, hey, copper wire, that's a boring subject. You can buy that everywhere in the DIY store. Copper is high-tech, and without copper wire, we can't work. That is right. And of course, you can produce copper wire. Probably I could build a plant and build my own copper wire, but could I actually compete with Elektrisola? I have observed it over 40 years because there was a friendship, and I thought, hey, what they do is always correct. And if there's a crisis, I buy a competitor. And if I have to hedge myself from downwards, then I need somewhere. If I need to go to China, I go to China. And this is a company planning in the long run. They have done a few very smart decisions, and it's really very successful. Peter Schildbach will talk about that later. And then let's talk about motivation and endurance or perseverance. We think about long-term horizons, long-term performance, and Jonas Deichmann is an extremes athlete who actually crossed several continents. He was really fascinating to our colleague Thomas Bosch. Probably he will be fascinating to you, and he will have a kind of multi-vision show us what he has done. And since this is so much work, at 6 o'clock we can have a little bit of limoncello spritz or Aperol spritz to recharge our batteries. Now it's 11 o'clock. We'll have a short coffee break at 11:15. We will go on with Lars Feld, who will talk about the economic situation of Germany and the world. Thank you very much.